Find your answer. mass.gov/PFML. It's time to get to know paid family and medical leave. A message from the Massachusetts Department of Family and Medical Leave.
Things may seem a little bit different now, but your health remains a priority. With the Massachusetts Health Connector, you can stay happy and healthy. Whether you're employed or have recently lost your job, you have options to stay insured. Visit mahealthconnector.org to compare health insurance plans and choose the one that's right for you and your family. Open enrollment ends on January 23rd. Visit mahealthconnector.org or call 1-877-MA-ENROLL. That's 1-877-MA-ENROLL.
Are you tired of renting and need more of your own space? Are you getting stressful letters or calls from the bank? Does your home require expensive repairs and you just don't have the funds to fix them? Regardless of whether you want to buy or sell, Tayla Andre of Thumbprint Realty is here to help. From saving your home from foreclosure to walking you through the process of becoming a first-time homeowner, Tayla makes real estate easy. With your best interests at heart, knowledge of the market, and a passion for people, Tayla is dedicated and motivated to serve you.
Good rising, good afternoon, good evening, or good night. I am Tayla Andre, and I am determined and dedicated in assisting you in all of your real estate needs. Give me a call at 617-459-0041. Again, that number is 617-459-0041. Or you can email me at TAYLAANDRE@thumbprintrealty.com.
Igniting the airwaves. Spark FM.
Good rising, good afternoon, good evening, or good night. I am Tayla Andre. Waking up with Tayla Andre has absolutely nothing to do with the time of day. We link up at about waking up your third eye with unorthodox conversations leading to universal consciousness. Can I tell you how super excited I am for today's conversation? So we are talking about new year, new me. What are you going to do differently this year? And I am ready to increase my finances on every level, including my stocks, my options, a whole bunch of things I have no idea about. Cryptocurrency, I don't know. We shall see. But let me tell you about this guy, this man. So I have been following Desirable Equity for probably like 4 or 5 years now. And when I tell you he get money, long money, and teach people how to do it for themselves. So I am a slow learner in this aspect, but recently I've been a part of the newsletter, the monthly newsletter, and I have learned a lot. And not only have I learned a lot, but I've earned a lot. And that's the point, right? And so without any further ado, I would like to introduce you to, I butcher your name. Is it Palmieri? Say it again. Lord, you can hear me, right?
Here we go. I unmuted. There we go. I unmuted. My bad.
Okay, say it again.
Palmieri.
So I've been saying it right.
Yeah,
okay.
Palmieri. Like your buddy, your pal.
Your buddy, your pal.
Yeah.
That is married. So as far let's talk about this money. Let's talk about how do we get this money? How do we start? So let's say, for instance, start all the way from the beginning. I know nothing about stocks. What, like stock of corn, stock of wheat? What is a stock?
Right. Okay. So first I want to say thank you for having me on the show. This has been a long time coming. And, I may not sound excited, but that's what happens when you have 4 children and they don't know what bedtime is. So, pardon me for my lack of sleep, but I am excited to be here, right? So your show is about waking up your third eye. And I just wrote a couple of notes and I'm just going to rattle them off before we get started, right? Mm-hmm. So to your audience, they want to wake up to what's going on when it comes to money, right? You want to wake up to that. You want to wake up to why the market continues to go higher. You also want to wake up to what happens. The most important thing, as far as I'm concerned, is what happens if you do nothing. Meaning, what happens if you sit on the sidelines and you're not involved, right? And then we want to talk about the easiest way to get involved in the markets. But as far as your question, what is a stock? A stock is a certificate of ownership. The easiest explanation is companies need money to grow and expand their operations. And when they are publicly traded, it's a platform for you to be able to buy into that company. And by buying into that company, you get a certificate of ownership. in essence, your money is partnering with that company. So now your interests are aligned. When the company performs well, their stock increases. And as their stock increases, the money that you invested increases by percentage. So let's say you had a stock like Walmart, and Walmart goes up 10%, and you put in $1,000. If it goes up 10%, your $1,000 contribution goes up 10%. Does that make sense?
Mm-hmm. So I get $1,100 now.
Right.
Okay.
Simple explanation.
That's not a lot. That's not a lot of money, though.
I know, but go outside and walk around. Where you at? You in Boston?
Yeah, I am.
Go ask a homeless person for $100.
Go ask anybody go ask the city, go ask the state for $100 if you get it.
I'm just saying. So we don't want to scoff at the returns that the market is giving us, because you might say $100 is not a lot, but I look at it like this, and I'm talking simple numbers, right? For people that are just getting started, they've never been involved. I'm not going to say, put $1 million in. You may not have it. If you do, you may not be comfortable doing it if you don't know what you're doing, right? So I got to start with small numbers. So that's why I'm saying to you, $1,000, it goes up 10%. You get a 10% return on your money. But if you leave the money in the bank, you're guaranteed to get nothing.
You might get like 42 cents.
That's right.
If you have long money, because the money I got is like, you have what is it called? You have an interest payment or whatever it's called.
Mm-hmm.
And it's like 0.1 cent, literally.
Right. Well, how about this? If you have $1,000 in your account, so say you started with, let's use bigger numbers.
Okay.
If you had 100 grand in your account, right, at the beginning of 2020, and you didn't invest it at all, and it sat there, you probably would have 100,000, maybe 100,000, $400, right, in terms of interest payments that they would have gave you. But in actuality, the buying power would have been reduced by 15%. So your 100 grand, even though it says 100 grand in the account, because of inflation, because your money's being devalued constantly. So because of inflation, your 100 grand would only be able to buy, in today's dollars, 2021, would only be able to buy 85,000 worth of goods
and services.
That's right. That's right. And as our community, we don't see that invisible thief, the inflation, right? That's constantly robbing us. So I look at it like this: for the same reason that people are scared to invest, I invest. I invest because money, let's look at money like a person. And all people need air, right? And air to breathe, air to survive. So if your money is not getting air, and look at the air as a return on investment or a return on your money. So if your money's not getting air, it's going to evaporate and erode. You follow what I'm saying? So another simple way to look at it, the shopping cart test. 10 years ago, if you took $100 and went to the grocery store to buy something, you would probably be able to get a decent amount of groceries. Today, not the case. $100 is not going to really go that far, right? And that's because everything is going up in terms of cost. But I don't want to get away from your original question. Your original question was, what is a stock? It's a certificate of ownership.
So let's say, for instance, so this is the first conversation that I'm really having about stock. My parents never taught me about anything. Like, I'm 50 something years old, and this is the first time I understand. So a stock is a piece of ownership into a company. So I have, maybe $1,500 in savings. Let's take it a little lower, right? Because the Black community only has $8 in a bank account, apparently. And so let's say I have $200 and I'm willing to do this stock thing with $200. But at the same time, I'm not trying to lose my money.
Right.
But at the same time, it's just been sitting in the account doing nothing. If I invest it, what are the risks? What are the returns? And when can I get it back?
Okay. So what are the risks? What are the returns? And when can you get it back? Okay. The risks are, you could lose every dollar if the company files for bankruptcy. If the company goes out of business, you could lose every dollar, right? What are the returns? The S&P 500, which hit a new all-time high today, while we're talking right now. It actually hit a new all-time high. So the S&P 500 is the top 500 companies in the world.
Who is
So
S and who is P? Because everything named after somebody.
Standard and Poor's. There you go. You're right. You're right, sis. Talk that talk. Standard and Poor's is a rating agency, and Standard and Poor's S&P 500 is basically an index. It's an index of all the top 500 companies globally, and you have to hit a certain benchmark with sales and growth to get into the S&P 500 and stay there. That was the controversy with what was going on with Tesla. Tesla has been fighting to get into the S&P 500. And the reason why you want to get into the S&P 500 is that that opens you up to a whole different pool of investors. There are mutual funds and pension plans, like the California Teachers Plan, the California Firefighters Plan, or the New York Firefighters Pension Plan. They're only they can only invest in certain quality of companies. So that would be S&P 500 stocks, right? So some of these mutual funds or pension plans or exchange traded funds didn't get to participate in a lot of the growth that some of these smaller companies experience because they were not of a certain size. And so because they weren't of a certain size, they weren't allowed to get access to those investors. But
Okay,
as far as the returns,
I want to stay here for a minute before, because that was a lot of information, and I want to make sure that we understand all of it, right? Because this is the intro of it. And so, what is before S&P? So if S&P 500 is the top 500, who am I? Like, if I get kicked out of the 500, where am I to go?
Well, there are different S&P brackets. So, I'm not familiar with every single last one of them, but I would tell you that there's S&P small cap, 600, S&P mid cap 400, right? The NASDAQ 100, the Russell 2000. So the Russell 2000, sorry, that was one of my alerts, but the Russell 2000 is the top small businesses. That's a small business index, right? So there are different levels, so to speak.
Okay. And so where is NASDAQ fit on that? So NASDAQ is like open market everybody, and then S&P is like you have to show and prove. Is that what S&P stands for? Show and prove?
I mean, if to get the community to correlate with it, fine. You know what I mean? No question. But as far as the NASDAQ is concerned, the NASDAQ is where a lot of the top technology companies that you're familiar with, that's the exchange that they sit on, right? So the NASDAQ is your Amazon, your Google, your Netflix, your Facebook. That's the and I'm just saying those because those are names that most of your viewers are going to be 100% familiar with on a first name basis.
Okay, I'm sorry, I digress. Continue.
No. So NASDAQ, S&P 500, they're just so the NASDAQ, S&P 500, and the Dow Jones. Dow Jones are the top 30 industrial companies, right? So you got your Caterpillar, your John Deere, you got your Boeing, right? You've got your let's see on the Dow. You've got Visa, which is considered, even though Visa is a technology company, Visa does sit on the Dow, right?
So where does gold and like plutoniums and all of the
those are commodities.
Okay.
And I wouldn't tell your viewers to start there. You got you remember our audience, we're taking baby steps, right? So your audience is the original question was, what is my risk? What are my returns? And when can I get it out? Right? That was the original question. So Correct. Your risks, like when you buy S&P 500 companies, the risk is far removed. It's not that there's no risk in investing in the S&P 500 companies. But the easiest way I like to explain it is the S&P 500 companies are like companies that you patronize on a weekly, monthly, or in some cases daily basis, right? So, people are watching Wake Up with Tayla, and most of your viewers probably brush their teeth, I hope, right? So that's Colgate-Palmolive. Colgate-Palmolive is they supply toothpaste amongst a whole host of household consumer products, right? You've got Nike. If somebody's looking to go exercise, most people wear Nikes, right? If I need stuff for my house, I'm going to go to Walmart or I'm going to go to Target. I got a question for you.
Mm-hmm.
How long have you been shopping at Walmart?
I don't
What
actually.
about Target?
So I'm not a Target, Walmart type of girl.
You got to get your stuff from somewhere.
Dollar Tree.
Perfect. There you go. How long have you been shopping at Dollar Tree?
Years.
Could you quantify that? 5, 10?
About 12.
Now, you've been shopping at Dollar Tree for 12 years.
Mm-hmm.
What if you took the approach of owning the stock? So what that means is, let's say you walk into Dollar Tree and you spend $50, $30, small number, right? Because everything in the store is $1.
Mm-hmm.
What if you took the same approach of matching your ticket, your receipt with stock? So now every time you walk into Dollar Tree, you're like, okay, I just spent $25. I'm going to buy $25 worth of stock. Now you're accumulating the shares. What if you did that until you stopped shopping there?
You know what? When you think about it like that, in the sense of Nike, in the sense of like, I don't do names, but like the whole Gucci product. Let me tell you, so I bought Maserati stock. You know, Maserati is like $9.
Okay.
I didn't think that it would be so low.
Well, the price per share is just representative of the amount of outstanding shares available in the market, right? So Nike, they made it a rule of thumb every time they got to $100 a share. It used to be the case. I don't know if they've done this recently, but every time they got to $100 a share, they would do a stock split. So what that means is they would take the shares. Let's say you had 100 shares at $100 a share. They would now give you 200 shares at $50 a share. When you sell it, it's the same dollar amount that you're going to receive. But the reason why they split the stock is to make it more attractive for new buyers that want to buy the stock, because they know, most publicly traded companies know, that people suffer from sticker shock.
Mm-hmm.
So people don't want to buy when they see a company like Amazon trading at $3,200 a share. They panic because they're like, I don't want to spend $3,200 on one share of Amazon.
And somebody else just split stock. It was a big name who recently.
Tesla.
Yes, Tesla stock. And so splitting stock is like saying you could either have a $20 bill or you could have these 21s, and these 21s look a lot more attractive than this one $20 bill, but it's the same currency.
Right.
Okay.
Right. You got it.
Yeah, y'all don't have no what's the name questions? Y'all don't have any intro questions? Because I'm a baby to all of this. So I might have been following him, but I've been more so following his success in like being a cheerleader than actually being somebody in the sport playing. So I am 1 year new to this as far as stocks and options. And I don't gamble, but as far as options are concerned, I turned into, it was horrible. I had to put it down. Because I could have just went to the strip club and saw some ass. Like, that's how bad it was with options. Why are options so bad for people like me, but yet there's like 1,000,001 groups that are like, join our group and we'll teach you how to get all these options. And
so the thing about options is that options employ leverage, right? And the easiest way to explain options for your viewers is, let's say you were trying to cut a piece of wood, right? And you had a handsaw. When you use the handsaw, that's like buying stock. When you're cutting the piece of wood, if you slip and cut your finger, you have a small flesh wound, right? You can heal from that. You put a Band-Aid on it, no problem. When you use stock options, it's like a power saw, all right? And you're using now stock options, you can use that same power saw to cut the wood faster. But the problem is, if you're not a trained professional, I wouldn't even necessarily say a trained professional. If you just don't know how to use the power saw and you slip, it will cut off your wrist. Your whole hand will be gone.
Now my arm, I missed my whole left side was like.
Right. So when people are just getting started, I tell them, everybody wants to talk to me about stock options. I say, guys, let's crawl before we walk. When it comes to the stock market, it is get rich, but it's not, and it can be get rich quick. But for most people, they just need to get started and get the consistency going. So what that means is this. Let's say your viewer, and I'll get back to the stock options in a second, but let's say your viewer started the year off and they said, I want to start with the $2,000 stimulus that these guys are giving out, right? So $2,000 stimulus, and let's say your viewers are gainfully employed and they can afford to do $200 a month. And let's say this is the first year in the next decade. So let's say we want to do this for 10 years, right? So we want to do $200 a month for 10 years. And so the average rate of return in the market is a 15% return, right? So let's say you were getting a 15% return over 10 years. What do you think you're going to end up with? You started with $2,000. You started with $2,000.
But then it increased every year. No, it's $2,000 every year, though, right?
No, it's $2,000. It's $200 every month.
But
so your initial contribution is $2,000, and your monthly contribution from your paycheck, right, is $200, and you're doing this consistently for 10 years. Now, for those of you who are watching, I would automate it because life happens. And so, life gets in the way, kids, work, leisurely activities, vacations, drama in the White House, whatever. But if you automate it, that's one less thing you got to worry about.
Okay.
How much do you think you're going to end up with in
Hold
10
on,
years?
I'm trying to do the math. I don't have a right here to do it for me.
Just guess. I already did the math. I'm just saying, just.
I don't know. Okay, so 2,000 to
Initial contribution.
Okay, initial contribution $2,200 a month for 10 years. Like, that's some math. So how about give me the number?
Look, in the interest of time, it's $56,820.
Over the course of 10 years.
That's what you're going to end up with. You're going to end up with $56,820. Now, you might say, hey, that's not a lot of money, right? But I understand that. But in 2010, folks could have been doing this. And in 2020, 21, they would have possibly had this $56,000 if they had got started 10 years ago, right? So it's a small number. But let's just do it like this. Let me take my situation, right? So I start off with my SEP IRA, and I make a $10,000 initial contribution to my self-employed IRA, right? And I got a car payment that's $750 a month, but I'm about to be done paying that off. So let's say I take the $750, and the car is still relatively new. I take the $750 a month that I'm paying in the car note, and now I contribute it to my retirement account. In 10 years at a 15% rate of return, I'm going to end up with almost $250,000, $223,189 to be exact, right?
Hold on, for $750 a month?
That's right. And then you gotta, I know it sounds crazy what I'm saying.
It does, because there's a lot of people that pay that for a BMW right now.
1,000%. And they don't realize that you could have bought 4 BMWs, right? If you had just invested, you could have bought 4 BMWs cash. And most of those people driving the BMWs probably don't have the greatest of credit. So they're really getting poor terms when it comes to borrowing the money. But yeah, I use that as a great example. $750 a month, 10 years. That might be a stretch because $750, I don't know your audience, but an emergency happens and they stop. So I always tell people, pick a number that for an absolute fact you won't interrupt. Like, look at the average cell phone bill. The average cell phone bill is $150 a month, right? That's by design. They know that people want to communicate and people are not going to cancel their cell phones. They had to make it so that it's affordable to everyone. So if you look at these subscription services that we have, there's a threshold in terms of the price that the consumer is willing to pay.
That whole for like $14.99.
$14.99, $9.99. You know what I'm saying? Like, and they raised that number as inflation goes up. Like there were services like Pandora. You know, Pandora, the streaming music app.
Mm-hmm.
For the Pandora Premium was $5 a month. You ain't getting no music service for no $5 a month now.
Listen, my daddy used to get Netflix DVDs for $5.99 a month. We were grandfathered in, and they were like, "Oh, we're not doing grandfather. You got to pay this $15.99, and we're just about to increase it by $2." So
yeah, because they got shareholders to appease.
So okay, go ahead.
That's what. So you want to invest Netflix? You've been with Netflix since the red DVD, the red envelope.
Oh, my dad. So I was a teenager. I didn't know no better. My daddy knew better though. We have these conversations all the time. Had my father invested in Netflix when we were getting the DVDs and I was in high school, listen, I wouldn't even probably be on there right now.
but
in life.
Yeah, but you listen. You're a mom. You have children. You know what I'm saying? So you know better than your daddy.
And Netflix ain't going nowhere. You right. I got a couple.
Not even that. Not even that Netflix ain't going nowhere. I look at the stock market as like Penn Station. And here's what I mean by that. There's always another train coming. There's always another opportunity. People talk about, like the news loves to, oh, if you would have invested this much in Amazon, that ship has sailed. But there's another large growth company coming. Like there's another company that's growing right now as we speak, and they're coming. And by the time it arrives on the S&P 500, it won't be too late. It'll just be an extremely proven business model. It'll be a thoroughly proven business model. They have consistent earnings, consistent growth. But when I initially bought Amazon, it was at $500 a share. That was my first purchase of Amazon stock for my retirement account. Right? So my cost basis is $500. But check this out. At $500 a share was at the all-time high. People said I was crazy buying it. They're like, yo, this thing is going to go down. Like, why would you buy that? It's at $500 a share. You can only get a few shares. But the thing about it is, what I've come to understand 13 years in the business, when companies are at their all-time highs, that doesn't necessarily mean that business stops. A company can continue to execute and continue to do good. So how do I get my people to understand that and put their need for profits aside? Mm-hmm. I came up with a concept, Tayla. Own where you shop.
Okay. So we're going to pay these bills really quickly. Own where you shop is where we're going to start off at. And when we come back, and all your kids must be on the internet because we just hear you and you are a freeze screen this whole time.
For me?
Yes. Yes, we have not been able to see you catch up to your words, but as long as we can hear you, that's all I need. And so we're going to go ahead and pay these bills. When we come back, we're going to continue talking about stocks and how you can at least begin. This is a beginner conversation. It is an open market right now. And so we are so lucky that he is taking this time while working to break this down for us. And we will have, and if you are already in the know and you are looking for, some advancement, today is not that conversation. Today is for those who have no idea what a stock is, a stock of corn, a stock of wheat. We're going to figure it out and get you set up so you can make some money.
You are enjoying the miracle of radio.
Radio. New England's #1 urban Caribbean music. Radio. Spark FM.
Paid family and medical leave is here. And if you're an employee in Massachusetts, you probably have questions. How does PFML work? When can I start using my benefits? How do I apply? Is PFML really for me? There is one place to find your answer. mass.gov/PFML. It's time to get to know paid family and medical leave. A message from the Massachusetts Department of Family and Medical Leave.
Things may seem a little bit different now, but your health remains a priority. With the Massachusetts Health Connector, you can stay happy and healthy. Whether you're employed or have recently lost your job, you have options to stay insured. Visit mahealthconnector.org to compare health insurance plans and choose the one that's right for you and your family. Open enrollment ends on January 23rd. Visit mahealthconnector.org or call 1-877-MA-ENROLL. That's 1-877-MA-ENROLL.
Let's start with the big question.
The all new Spark FM.
Good rising, good afternoon, good evening, or good night. I am Tayla Andre. Waking Up with Tayla Andre has absolutely nothing to do with the time of day. We link up at about waking up your third eye with unorthodox conversations leading to universal consciousness. We want to get you in the game, baby. The beginning, the info, the intro for stocks. I need you to understand how to get into this game that everybody else is playing. This is chess, not checkers. You're in it for the long run. You're not putting money in. It's not a get rich fast, a get rich quick. It's a get rich slow, and really planning for retirement and planning for your future and planning for your what my broker Alex Edwards say. He was just like, if you're not planning for 3 generations, you're not planning. Period. And so that's what today's conversation is about, getting you ready so you can begin your stock portfolio. And so, Paul Mary, I have a couple questions that our viewers and listeners have been asking. So I've been buying stock for $10, $25. What's the best amount to start to actually start getting some money back?
Okay. When you say getting some money back, when you're in, can you hear me, Taylor? You can hear me, right?
Yes, I don't need to see you. I can hear you.
Okay. When you're getting money back, the way to get money back is you could do one of a couple of things. You can sell your stock, and that's capital appreciation, meaning you bought the stock at 10, it's gone up to 20, you're up $10 in profit, you sell it, you're getting back $20.
Mm-hmm.
When you buy a stock that pays dividends, there are companies that pay dividends. Some of them pay monthly, some of them pay quarterly, some of them pay semi-annually, and even there's a few of them that pay annually, right? And for the people that just want to set it and forget it, you might want to look at and set it and forget it and get cash flow back. You could look at buying a stock that pays dividends.
How do I know who pays dividends?
Well, you can go to Google and just type in dividend paying stocks. So when you type in dividend paying stocks, first thing that comes up
are the 15 top dividend stocks to buy for 2021.
Right. There's a website called Dividend Aristocrat, I believe it's called. Dividend Aristocrat. Let's see. Yep, suredividend.com.
Oh, you know what I wanted to ask you really quickly? So if for anybody who knows just a little bit about stock, you guys have seen Motley Fool. And I'm so like, are they credible or is that just like a scam type thing? They're like, oh, pay us. Da, da, da. So they'll go through a whole 20-minute article about like, this stock is amazing. This is the next thing you need. We said, projected that this person would do this and it did. And all you got to do is pay us $39.99.
Right.
Who is Motley Fool, and am I a fool for trying to follow them?
No, Motley Fool, I mean, I kind of felt the same way when I came across them, but I've seen them give information that has panned out for people. I don't utilize Motley Fool, but for your people watching, I like Wall Street Journal. I like Barron's. Those are accredited financial magazines. I'm not saying that Motley Fool is not an accredited situation. Investors Business Daily, IBD. So Investors Business Daily, I believe the website for Investors Business Daily is investors.com. Easy enough, right?
Yes.
But what you're hitting is a paywall. So you go to Motley Fool and they'll let you read some information for free or whatever have you, and then you get hit with a paywall, right? Because they want you to subscribe, and that's how they keep the lights on and make a living.
Okay, now I can't hear you, so now we got a problem.
Can you hear me now?
I can hear you now.
Okay.
All right, so let's say, for instance, once upon a time, you could only invest in stock if you had long money. So investing in stock wasn't for the everyday person. You had to purchase like 10,000, and I remember this from like 7 years ago, 10 years ago. If you didn't have no $10,000, $20,000 to invest, you couldn't invest. And now all of a sudden there's apps that allow you to invest in anything. You could do like a dollar investment.
That's right.
So what are the apps that you suggest that beginners use?
I like Cash App. So Cash App has a feature on it, right? On the Cash App, you got a little home button all the way to the left. Okay. I'm just pulling up my Cash App so I can see it. Yeah. They got a little home button. You're looking at the bottom of your phone now. So they got a little home button. Looks like a house. And then they got a little button for a debit card. And then they got the cash, the dollar symbol. That's where you send and receive money to people. And then it used to be a little squiggly line, but it looks like they updated it. So the running joke between So the running joke between me and my friends was, hey, listen, man, you guys, you got to tap on the little squiggly line, so you could use the Cash App investing feature. So yeah, you can buy Bitcoin and you can buy stocks through Cash App.
Yo, who did I want to look up? Hold on, give me 5 seconds. Who did we went down the rabbit hole yesterday. Who did we look up yesterday for stock? Because McAfee told you guys to stop using WhatsApp and to use Signal. So Signal isn't on the green Robinhood.
No. So what happens is Signal, first of all, the signal that everybody is buying is actually the wrong signal. And that happens a lot. That happens a lot, yo. I've seen it happen a lot, because what happens is I've seen it happen with Zoom, where Zoom is symbol ZM. And then when people wanted to buy Zoom, they couldn't find the ZM. So they just typed in Zoom, ZOOM. And so I'm actually looking at the chart on that ZOOM. When people confused it with the Zoom streaming platform, it went from $2 a share to 60.
Hold on. But everything has a tinker. Like, why wouldn't you Google what the tinker is?
The ticker symbol. So what it is, listen, people are lazy, I guess. I don't know. I don't know how to slice it. I'm in the business and I've made errors like that. Like, oh, sorry, that was an alert. I've been trading Tesla, but yeah. So people they make those mistakes. But with Robinhood is not full service, so you will not be able to buy everything on the Robinhood platform. Right? So I'll give you
full service.
Say it again.
Who is full service?
Full service, that's self-directed. So self-directed meaning you take care of the buying and selling yourself. Some full service self-directed brokerages are E-Trade, TD Ameritrade. Yeah. Interactive Brokers.
Hold on. I'm downloading the app. So let's say, for instance, I have $500 and I want to hire somebody like you because I don't know nothing about nothing and I just want to win. So How much do you cost?
Well, okay. My firm, I work with Richfield Orion, right? And we're a full service broker. We're nationwide. I handle money for accredited investors, high net worth families, right? Working with me directly is going to require a lot more than $500, right? And the reason for that is because there's a couple reasons. My firm only allows me to work with accredited investors. So accredited investors are annual income $200,000, net worth at least $1 million, and liquid assets of $200,000.
Pause. I need to understand where I need to be in life. Can we please repeat where the goal of?
So when I first came into business, right? So when I first came into business 13 years ago, being an accredited investor basically means that you make enough money to handle the risks of being in the stock market and everything that comes with it. So when I first came into business, accredited was $100,000 income, a net worth of 200,000. Net worth of 1 million. I apologize. Net worth of $1 million and liquid assets of 100,000.
Okay, so when you came into the business, 100,000 is what your what your annual income, your net worth, which can include the equity of your home, correct?
It depends on who you ask, right? But firm criteria is net worth. That's not including your home.
Ah, okay.
Because most people carry mortgages on their home.
Mm-hmm.
So let's say you live in a $500,000 home, but you owe 400 grand. You're not worth $500,000. You're worth 100 because you owe 400 to the bank.
So that means you've already been investing. I'm trying to think, like, what circumstance do you just have?
My clients that invest in me, well, my clients that, the money I manage for them, they know how to invest in the stock market. They just understand that it's better to hire a professional who has the time and the expertise and is not emotional when it comes to making decisions. I'm not emotional. I'm gonna act off the information I see. And some people don't have the ability to do that or the time, so they hire a professional to do it, right? But how do you benefit in the market? The easiest way to do it is the own where you shop psychology, right? I like to look at that as an idea, own where you shop. So what that means is if you're spending money at Target, you should own Target stock. There's no ifs, ands, or buts about it. Like, you spend money there. We've been shopping at Target for the last 10 years. If I was buying Target shares for the last 10 years, I'd be doing substantially better because Target has skyrocketed, right? And people will say, "Oh, it's only working out now." That's fine. But I've been shopping at Target for 10, 15 years. So if I was accumulating all those shares over 10 to 15 years, I'd be in phenomenal shape with that position. You follow what I'm saying?
I do. But at the same time, so I'm trying to shop this Maserati truck, and the stock for Maserati is $9. And so
But here's the thing. Look at Hyundai. Hyundai just partnered with Apple and it went up 100% in 2 days. Hyundai.
And Hyundai suck.
And you want to know something? But it's the ticket price. Like, if Apple partnered with Maserati, who can afford it?
That bitch would have jumped.
It would have jumped, but then it really wouldn't have, because who can afford a Maserati? Not everybody in America can't afford a Maserati.
But everybody can afford a Hyundai. I got you.
Right. So it's like Apple's business is getting the product in as many hands as possible. That's their business. Get the product in as many hands as possible. So I think they've got 6 different tiers of phones. So they've got a phone for the poor man and woman, and they've got a phone for rich folk. You know what I'm saying? They got the 12 Pro Max with the big memory capacity. They have something for everyone.
Okay, so this might be a little bit complex for those that are just now tuning in and trying to learn the basics of stock. But like, when you're taking a look at the market and you're paying attention to S&P's show improves, you're paying attention to the Wall Street Journal, you're on Yahoo Finance. Like, who knew that Hyundai and Apple were going to merge and Hyundai was going to go up 100%? Like, how do I know what to invest in?
So
when I can't afford somebody like you because I'm not accredited yet.
Well, that's why. That's why we go back to the newsletter, right? So as far as the newsletter is concerned, the newsletter introduces people to up and coming companies, right? And so it's important that we take advantage of the up and coming companies, because, like, I'll give you one in particular, APPS. That was on the newsletter at $6 a share.
Who's APPS?
APPS. Yep, that was on the newsletter. Company's called Digital Turbine.
Okay.
And so that was on the newsletter in April of last year, and it was at $6 or $7 a share, right? And so today it's at 50. It's been as high as 60, I believe. And it's gonna, as far as I'm concerned, I still like it. I wouldn't just say because I don't want it to be construed as advice. I'm just saying that I like the company. What you do with that is up to you, right? But the point being is, those are the kind of companies that people get introduced to when it comes to the newsletter.
Okay.
So, and that's updated on a weekly basis, right? So every week, and you have to open the emails, my dear.
You ain't gonna sit here and blast me on air, though.
I am, though, because you're telling me you're trying to come up, and
I am, and it really is in my email too. And I had all intentions of opening it, and didn't. I didn't.
yeah, I'm just saying, if you're saying you're trying to come up, so and the come up came and found you, but you gotta take advantage of the come up.
Okay.
You
So
know,
can you pull up the newsletter, and can we talk about what the newsletter say today?
Oh yeah. Let's see, where we at? Posts. Let me just say this, right? I don't want to get away from own where you shop, because I think that's really it. I don't want to get away from that. Treat
I
it
don't
like
want to get away from it either. Shop, like, own what you shop. So I really do like Hanes sweatsuits. That's what I need to invest in. And what the people name? New Balance.
talk to 10 of your friends and ask them if they shop at 10 of the most popular stores. You shop at Amazon, you shop at Walmart, you shop at Nike, you shop at Starbucks, you shop at Netflix, you shop at Best Buy.
Mm-hmm.
If 80 or 70% of them say yes, that's a clue. It's like, look, people are spending money there. I call them the fabric of life society, like the fabric of society companies. These are the companies that, come hell or high water, people are going to shop at. If something breaks in my house, I'm going to Home Depot. When anybody thinks of home improvement, they think of Home Depot first and then Lowe's second, for the most
I know.
part.
Did you know Lowe's was owned by a black man? So you should be going to Lowe's.
It's not owned by a black man. The black man is a CEO, but he's not the owner of the company.
It's somebody on the S&P who approves of Black Lives Matter, and it has a black man in a position of power. That's what I meant by it was owned by a black man. But you're right.
No
He's
doubt.
The actual owner.
Don't mind me, yo. Don't mind me. But,
you pulled up the newsletter that I didn't open?
Say it again?
You pulled up that newsletter I didn't open?
I'm trying.
You know what? And I'm thinking about how much money I spend on food that could have just went to stock. I'm kind of sick right now thinking about like all of the money that I spent on eating outside, and I could have just invested in stock, and I would be skinnier.
Okay. Can you see the screen?
No, I cannot.
Wait, hold on. Okay, how about now?
Mm-mm. Oh, you pulled it up. You shared screen. Yes.
Okay, so now what you're looking at is the newsletter that I sent out to folks yesterday, right? So the newsletter kind of shakes out like this. Here's a few companies that are listed in the newsletter. First one is called Fuel Tech, right? They're a supplier of proprietary technologies for air pollution. Now, the stock has been moving higher in recent months, but I highlighted this, the incoming Biden administration, because this is what's going to have an impact on, that's what's going to have an impact on what's going on in the company. You follow? Then I put up one called Schnitzer Steel. Schnitzer Steel is one of the largest manufacturers and exporters of recycled metal products in the United States, right? But what moves a company's stock is the report card. So if you can see this screen here, the report card here, they posted 57 cents in earnings per share. That's EPS. That's more than double from the previous quarter. So they're earning more money. You follow what I'm saying?
And they're down $1.10. So if you want to save $1.10 today, you might want to.
Perfect way to look at it. Perfect way to look at it. Just because it's down $1.10 today doesn't mean it's a bad company.
And it was up $7 on January 6th.
Which is why they've made it to the list, because the earnings are starting to make a nice turn.
Yeah, in the last year, they've done considerable amount of growth.
That's right. And once a trend starts, it tends to continue.
So, all right, we have about 13 people right now looking at Schnitzer Steel. With Schnitzer Steel, how much should somebody buy?
So I tell people as a rule of thumb, like my newsletter folk, I tell people, you should be doing like 500 to 1,000, depending on what your situation is. And then you should, as the company develops, if you like it, you should be adding along the way. You're not going to like everything on the newsletter. Like some stuff might not align with your interests. You might not be interested in the energy sector. You might not be interested in electric vehicles. You might not be interested in steel. If you look at a company and you read their corporate summary and you say, oh, I understand that business, or I get it and I want to support that, so I'm going to invest in it, then you invest in it, right? But I always tell people, own where you shop, and also invest in what you understand. If you don't understand it, you shouldn't invest in it, because when it goes
But
down,
the newsletter told me to do it.
no. The newsletter didn't tell you to do it. The newsletter made you aware of it.
Advised.
The newsletter didn't advise you that either. The newsletter made you aware that this company is in a growth phase. What you do with it, what you do with the information is on you, right? But years ago, you had asked a question. You said, people needed $10,000 to invest, and now there's apps where they can do it very easily, right? So they took away commission as far as trading is concerned. So E-Trade used to charge like, $9.95 a trade, $6.95 a trade, and then Robinhood came along and democratized it for everyone. So when Robinhood did that, it pretty much forced everyone to go zero bill of commission. So now there's no excuse. So folks can get started on hold on one second, on I'm laughing at Michael. He said she didn't even open the emails. That's right, Mike. She didn't even open the emails, dog. Like, Jesus Christ. So yeah.
Hold on, I want to know what misinformation was hot.
I don't know what he's talking about.
Okay, so all right, we know a little bit. We have a little bit of information. How do I get a hand of the newsletter so I can get the info? Mind you, Taylor I will open it. I will open it today, and he knows if you open it or not because he be looking at the open.
I'm sending the link to the chat, and you can share that with your folks.
Okay.
And then what I did was I also added a component where I'm going to be doing a Zoom, like I do weekly Zooms, to have open discussions about these companies, because what I've realized is that as I'm sharing the information, people weren't opening the emails, and I don't know if they weren't opening them because they were just intimidated or life just got in the way or whatever it may be, right? I'm not sure.
Michael said he want a whole he want the email for the last year. He want the newsletter for the last year.
Well, he's got to hit the link. He knows what to do. He's just saying, hey, let the man speak.
I'm gonna just be quiet. I'm gonna just sit here and
I'm telling you guys, it's not hard. The hardest part about investing is getting out of the way. That's the hardest part. It's like, and let me tell you why I invest first. So rich people invest their money first, and then they live on what's left. That's what I'm teaching my kids, Taylor. You make a buck and invest the money first, and then you live on what's left. I tell people 30% into savings, as a start, 30% to savings, 30% to investing, 30% to expenses, 10% to yourself. That's just me, right? But if you want to get more advanced and more aggressive, I tell you, throw as much money as you can at your investments, because that puts you closer and closer to financial freedom.
How do you feel about Bitcoins or cryptocurrencies?
I can't buy them for my clients, right? Because it's not a security. And that's the big thing that's going on with Ripple right now. Ripple's being sued by the SEC because they want to classify them as a security so they can regulate that industry. They want not necessarily the industry, but the actual situation over at Ripple. They want to be able to regulate it as a security. But as far as crypto is concerned, you got to be careful because it's an unregulated industry. There's no regulation. So I'm hearing a lot of people get these weird DMs or weird messages like, hey, do you like Bitcoin? I can help you trade Bitcoin. And if you give me access to your wallet, and some scary things are happening, you know what I'm saying? And next thing you know, your Bitcoin disappears. There's no recourse. There's no one to complain to. There's no regulator that can come and save you, you know. So, but as far as Bitcoin is concerned, you can buy Bitcoin on Cash App. You can buy Bitcoin on Robinhood. There are a whole host of other wallets and other mediums that you can use to invest or trade Bitcoin. You know, that's completely up to you. As far as Bitcoin is concerned, I like it as a concept. Imagine I was in Venezuela and I built a business for 30 years and I sell the business for $10 million. And then 10 years later, through no fault of my own, the government screws up. And now my 10 million only has 2 million worth of buying power, right? Because a box of, that's happening over there. It's really a bad situation over in Venezuela. So a box of cereal is like $75 over there.
What?
Yes. The situation in Venezuela is, as my brother would like to say, cray cray mouflé. It's just really crazy. It's really crazy out there. So that's hyperinflation.
Okay.
Now, Bitcoin is a borderless digital monetary network. So if I send you money, I'm in Venezuela, and I send you money and you're in Jakarta, Africa.
Mm-hmm.
When you receive the money, it's the same money. You're not going to lose any money to foreign currency conversion. There's also a finite supply. There's no central government controlling it. So there's no central government saying, oh, there's 20 million Bitcoins, let's print 20 million more. What the government is doing in our country in terms of printing US dollars, they're diluting the lemonade. That's what they're doing. You know, your money, you have to invest, because if you don't, your money will evaporate in terms of its buying power. It just keeps constantly getting eroded. So Bitcoin aimed to alleviate that. It's borderless. You don't have to worry about a central government meddling with it. You can't make any more of it. And people are considering it a store of value. Now, you know, there are people who say, hell no, I don't consider that a store of value. But I'll tell you a quick story. CEO of a company earlier in March of last year, he approaches his board and says, listen, guys, we got $600 million in cash and we got a problem. We're not earning any money on that money. So he proceeded to approach the board and say, I want to take the 600 million and buy Bitcoin. And they said no. And after, you know, a lot of back and forth, he said, all right, listen, I'm going to give you a tender offer. I'm going to buy your shares out from you, $20 higher than where the stock is right now. I want you out of the way. I need you out of the way. You got to move. So he does a tender offer, buys the shares from them for 120. And then once they're out of the way, takes the 600 million and buys Bitcoin at 15,000 a coin. Okay. Then turns around and does a secondary. So a secondary offering is when they raise money from public investors, from investors in the stock market. They say, okay, we're adding more shares to the pot. And this way we can use the money to grow our operations. So they raised another 600 million. He then took that 600 million and bought another $600 million worth of Bitcoin. So they've put all the company's money in Bitcoin, and everybody thought they were crazy.
Who was it?
MicroStrategy. I'm sure you've never heard of them. Most people haven't.
But how much money did they make?
The stock was at 100 when he did it. It's at 500 now.
Damn.
And the majority of those gains came from Bitcoin, because Bitcoin is up fourfold from when, from when he made the move.
Mm-hmm.
The US dollar is being devalued.
Mm-hmm.
And most people just don't understand that concept. And even if they do, they don't know how nefarious it is. Like, everybody's begging for $15 an hour, right? Oh, $15 an hour, $15 an hour. The reason why you want $15 an hour is because everything is more expensive. And the reason why everything is more expensive is because of inflation. And the cost of living has increased. And the incomes have not increased with the cost of living.
Okay. So I don't know if pause. I'm sorry. Let's pay these bills. When we come back, I have questions as far as I know you cannot advise, but I am interested in knowing.
Not on a public platform, Taylor. Not on a public platform. I can't.
We can't talk. So not advise at all, but can we talk about any stocks? Can we talk about stocks that you currently like as a person?
Yeah.
Okay, good. Then that's what we'll do. We'll talk about current stocks that he likes as a person, since we can't do no advising on a public platform. I want to take this private real quick.
All right.
We'll be right back. Waking Up with Tayla Andre.
Be right back. Alan, can you grab me a water, please? Okay.
Family and medical leave is here. And if you're an employee in Massachusetts, you probably have questions. How does PFML work? When can I start using my benefits? How do I apply? Is PFML really for me? There is one place to find your answer: mass.gov/PFML. It's time to get to know paid family and medical leave. A message from the Massachusetts Department of Family and Medical Leave.
Are you tired of renting and need more of your own space? Are you getting stressful letters or calls from the bank? Does your home require expensive repairs and you just don't have the funds to fix them? Regardless of whether you want to buy or sell, Tayla Andre of Thumbprint Realty is here to help. From saving your home from foreclosure to walking you through the process of becoming a first-time homeowner, Tayla makes real estate easy. With your best interests at heart, knowledge of the market, and a passion for people, Tayla is dedicated and motivated to serve you.
Good rising, good afternoon, good evening, or good night. I am Tayla Andre, and I am determined and dedicated in assisting you in all of your real estate needs. Give me a call at 617-459-0041. Again, that number is 617-459-0041. Or you can email me at TAYLAANDRE@thumbprintrealty.com.
The People Station. What is that? What is that? Spark FM.
Good rising, good afternoon, good evening, or good night. I am Tayla Andre. Waking Up with Tayla Andre has absolutely nothing to do with the time of day. We link up at about waking up your third eye with unorthodox conversations leading to universal consciousness. We are speaking with Desirable Equity Consultants, aka Paul Mary. He is over here doing his thing. He is at work trading stocks while also teaching us how to trade, or giving us the basics of trading. And so, Paul Mary, can you please help us understand? So the first thing you said, and one of the things that you stand on, is invest where you buy. So whatever it is
Only where you shop.
Own where you shop, regardless of whatever it is that you are currently wearing, what you eat, what you sleep on, all of that matters. Invest what'd you say? Invest where you shop.
Own where you
Own
shop.
where you shop. So
Own it.
who do you own and where do you shop?
Where do I shop? I shop at Walmart. I shop at Target. I wear Nikes. I own iPhones. I use Disney. You know, my kids love Netflix. I drive a Honda. I shop at Home Depot when I'm flipping my houses.
Honda don't have no $700 a month car note.
Yeah,
Unless
they
you got a
do.
Honda I don't know about.
Yeah, they do. Yeah, they do. Yeah, I paid my note is $750 a month because my term is super short.
Oh, okay. I guess that makes sense. My
Yeah,
bad.
my term is super short. Yeah, so I got a Honda Pilot, you know, with all the bells and whistles for the wife, and my term is super short, and I'll be done paying that probably this year.
Mm-hmm.
And my interest rate's like a 1.5% interest rate, something low like that.
Oh, you must have like an
Right. So yeah.
80 credit score.
Well, you pay your bills on time. What happened?
I want you to tell me, where else do you shop? So we talked about like the big box businesses, but is there anywhere else that you shop that we are unaware of, or anywhere else that you shop that we should know about? As far as like commodities are concerned, do you shop at any commodities?
I don't trade any commodities, and I mean, as far as commodities, I own gold, you know, like gold jewelry and things of that stuff, things of that sort. Yeah, but in terms of commodities, yeah, we all patronize on commodities. Commodities are hogs, orange juice, coffee beans, you know, soybeans. That's all commodities. So, you know, we're all spending money with commodities. But in terms of your viewers, most of your viewers right now have some sort of internet connection, and you guys are Xfinity out there in Massachusetts, right? Yeah. I don't know if Xfinity is publicly traded, but I'm Verizon, right? As far as you know, my internet provider, I use Verizon, so I own Verizon stock. You know, like I'm building a website, so I own GoDaddy stock. You know, single people, they're dating on Tinder and Plenty of Fish and what's some of the other ones? Christian Mingle, whatever it is, right? Black Planet, if that even still exists, I don't know. I think you're on mute, girl. I think you're on mute. I can't hear you.
Yeah, I wanted Instagram to get in on the conversation, so I gotta mute myself so there's not a double echo. Yo, Black Planet does not exist anymore. But hold on, I didn't know like dating sites had stocks.
Yeah, Match Group. So Match Group is the parent company for Plenty of Fish, Tinder, you know, just to name a few. Let me pull up the corporate summary so I could tell you exactly who. I'm married, so I'm not in the, you know, have to deal with this online stuff. But thank God for that, because let me tell you, whew, you meeting these people online, and then you know COVID, and oh, it's rough out there. So Tinder, Match, Meet IC, OK Cupid, Hinge, Plenty of Fish, Our Time. These are all dating platforms. So Match Group owns the portfolio of all those companies.
Okay, say the name of the company one more time.
Match Group.
Match Group. So Match Group, for everybody single on all of these dating sites. Let me call my baby father and tell him he needed.
No, but I'm saying, right, if you're spending money to be in the premium part of Tinder or whatever it is, like I don't know if they have a premium subscription. Most of these platforms are in business to make money, right? So they're definitely going to have some kind of premium component that you could spend money on.
So somebody mentioned something about electric companies. How do you feel about solar. So solar is becoming really, really big. And I know there's multiple solar companies. Do you shop with anybody on a solar level?
Yeah, Tesla.
You know what? They recently said that they wanted everybody, sort of like the Apple idea of like putting it in everyone's hands. Tesla did say that they wanted everyone to have solar panels on their house. And so
That's right.
when you think about Tesla, what is it, like $2,500 a share right now? If I go ahead and I invest $1,000 into Tesla, I'm literally owning like a negative 10% of a share. Like it's so small of a share.
It doesn't matter how much. It doesn't matter how much you own, more so than the return you're getting. You know, like you want a return on the money that you're wanting a return on the money that you're putting in. So it's like, oh, I bought Amazon at 3,200, but if Amazon goes up 15%, I made a 15% return. Like when they took away the commission and they introduced fractional share investing, the price of the stock is not really as relevant as people think anymore, because now you can just buy partial shares of any of these companies, partial shares of Amazon, partial shares of Tesla. You could, so there's no excuse. It's like, oh well, I don't have 3,200 to buy Amazon, or I don't have, and Tesla's at 870 right now. 850, sorry.
So today is the day that the Lord has made. I am going to go ahead and take this stimulus check that hit this account. Girl, check your account. My baby father out here dating folks. So if I yo, you seen all the memes? It's just like, girl, check your account. You know, my neighbor is having a barbecue with a whole bunch of, they're hilarious, but they're dumb at the same time. And so that stimulus check hit, you got the low $600. Taxes is coming up. Everybody get that tax return, claiming other people's kids, claiming somebody else's neighbor, you claiming elderly, you claiming the disabled. And for those who do not know, I'm joking about that because that's illegal. But on a serious tip, for those who do not know, if you have an elderly parent or a parent that you do take care of, that can be a dependent. You can claim your parents as a dependent. You're not going to get the child credit, but if you're taking care of your parents are on SSI, your parents are on disability, your parents have retired, and you are as West Indians, them parents come straight back home. We don't send them to nursing homes. And so make sure you get all your money off the table in the form of claiming who needs to be claimed. As far as my parents are concerned that have children 14, 15, 16, 17 years old, 22 years old, still at home being taken care of by you, but they still made a little money. They made a little 10,000 for the year. They made a little 13,000 for the year. You can still claim them, but they can still do their taxes as a dependent of another. So let me be very clear. Your child can file taxes on the money they made for the year as long as they file dependent of another. But you can still claim them on your taxes because they're still a dependent of you. And so I just wanted to make sure you guys get all your money off the table this year, every year when it comes to taxes. Let's bring it back to stock. And so I'm taking this tax return money, Palmieri. I'm taking this stimulus money, and I am opening up a Robinhood account. But there's some stocks that I'm interested in that aren't on Robinhood. So I am going to download. What was that?
So check it out, right? I've got 7 accounts. They all serve different purposes. You know, first account is joint with the wife, right? Then I have corporate accounts. Then I've got the SEP IRA. I got her IRA. My Roth IRA. Then I have my short-term trading account that I use as far as stock options are concerned, that I take a percentage of the profits from that account and I use it to pay bills, fund my retirement, put money in a joint account with the wife, stuff for the kids. And so I take the fast money and turn it into permanent money.
How?
I would tell people to have multiple accounts.
As far as IRAs are concerned, what is the best way? Like, we have a lot of hustlers out here, right? We have a lot of people who have 9-to-5s. Their 9-to-5s aren't really setting them up for the future as far as security for retirement. And they have a lot of side hustles coming in. How do I go ahead and set up myself for the future by means of like IRAs? And what is an IRA?
An IRA is an individual retirement account. So as far as a traditional IRA is concerned, I think the contribution limit is $6,500. Roth is the same, but the traditional is pre-tax money. So that money is money that you're putting in that hasn't been taxed yet. And so what happens is when you pull it out at the retirement age, you're going to get taxed, but you're going to get taxed at a preferential tax rate because of your age, right? Once you get to a certain age, your tax bracket should come down a bit, right? You should consult with your accountant just to make sure. But as far as the Roth IRA is concerned, the Roth is an after-tax vehicle. And I like the Roth because any of the gains, any of the profits, you're not going to be taxed on when you pull the money out at the retirement age. So if you're investing in a Roth IRA, and now at retirement, you've got $500,000 to $1 million, $2 million in there, you were already taxed on that money because it's income that you earned that you paid taxes on already. So they're not going to tax you on they call it a distribution. You're not going to get taxed on that. Now,
go ahead. I'm sorry.
I have a SEP. I have a SEP IRA, which is a self-employed IRA. The maximum that you can put into there, I believe, is $57,000 for 2020, $58,000 for 2021. So just to use easy numbers, let's say you made $200,000 for the year. You would, if you maxed out the contribution this year, your write-offs are going to start at $142,000, not $200,000. And listen, I don't just do the newsletter. I work with clients one-on-one on a coaching basis. You follow? So I also do that. But so you got $200,000 in income, $58,000. You max out the SEP IRA. Your write-offs start at $142. So if your write-offs are starting at $142, let's say to run your business, you incurred another $60,000 in qualified write-offs. So then you got dependents, right? So your accountant's gonna work his magic to show that you had, expenses as far as
clear. She gonna work her magic. Not everything got to be a penis related. Her magic.
Whoa. My bad. So her magic, and that's where you get your adjusted gross income. You want to reduce your tax obligations as much as you possibly can, right? A rich man told me like this, because I live on Long Island, and the taxes here are a bit high. And I was at this guy's house, and his property taxes are $82,000 for the year. Let me say that again. His property taxes are $82,000 for the year. And so, I said to the guy, I said, dude, like, how do you justify, like, my 14 or 15,000 in property taxes makes me sick, but he's like, listen, I justify it because I'm going to either give the tax money to my local municipality where they know me on a first name basis. He's like, in my town, they know me on a first name basis. I'm paying salaries, $82,000 a year in property taxes. I'm paying salaries. They know me on a first name basis. So when I call, they take my call. You know what I'm saying? Because they don't want me to move. You follow? So he's like, I'm going to pay it to the local municipality, or I'm going to pay it to some family in Arkansas who are Trump supporters, or whatever it may be, right? You're gonna pay it out to somebody that's abusing the SNAP system through a federal subsidized program. So he's like, I'd rather pay it on a local level. At least I see my money working for me. You're gonna pay one way or the other. You're gonna pay it on the federal level, you're gonna pay it on the local level. So your accountant's job is to reduce your tax burden. Now, a few months ago, people were beating their chest about Trump and the fact that he only paid $700 in taxes, right? Okay, he only paid $700 in taxes. Go up to any one of your friends and ask them if they want to pay more in taxes. If anything, everybody's mad because they don't have Trump's accountant's phone number. That's really what it is. Because nobody wants to pay more. Let's just call a spade a spade. You know what I mean? Nobody wants to pay more. I don't care who you are. You know what it's for, but you don't want to pay more. Hopefully I didn't go too far.
Nah, you didn't go too far because you absolutely right. I'm trying to find out who your accountant is. Yeah.
Well, my accountant is a little Dominican dude right here in Brentwood, man. You know what I'm saying? He works magic, you know?
Yo, share the Dominican dude's number though.
I will. I can put it in the chat. Hold on one second. Yeah, 631. I know. Listen, he takes care of me so well. I know it by heart.
That's how it's supposed to be.
That's it. I know it by heart. That's family right there.
Listen, I'm gonna go ahead and share it with y'all so y'all can have the little Dominican man.
And he works. Yeah, he works everywhere. And you tell him Paul Mary sent you. Just be like, hey, listen, I got your number from Paul Mary. You know, he's gonna call me like, who are all these people?
People who try and get that their tax reduction. What is it? Tax liability.
Yeah, the tax burden reduced. The tax liability reduced. Yeah.
Lord have mercy. Okay, so what did we cover that we need? What haven't we covered that we need to cover? Okay, no, let's go back. So I went ahead. I have my my Robinhood, but what's another app that I can download that can let me do like these dollar?
Stash is one. You know, Acorns is another. Cash App, like I said, the Cash App is great because it's the easiest brokerage account to open. They only ask you maybe 5 questions because they already know who you are because you have Cash App. So they don't ask you a ton of questions. You know what I mean? You might go to a brokerage firm like an E-Trade, and they're asking you, your annual income, your tax bracket, your dependents. They're asking all this information, and it might intimidate your viewers. Your viewers might say, I ain't got time to answer all these questions, or I don't feel like answering all these questions. You know what I mean?
Mm-hmm. Okay, so what if... So you said, I call it a tinker, and you said a ticker? It's a ticker
symbol. Yeah,
okay,
ticker
so
symbol.
I looked up the ticker symbol for the app that McAfee told you to go download and stop using WhatsApp, and I have not been able to find it. So I have
because that's not the company. You know what I'm saying? Like that's not the company. That people got it confused. So that's why I don't want to talk about that signal situation because you're misinforming. That's misinformation. That's probably what Michael was talking about. That information, the misinformation.
Oh, okay. Then what's the ticker symbol for the real company then?
Signal is a nonprofit. Signal,
so they can't even be traded because it's nonprofit.
Not directly, but to my understanding, company Twilio has exposure to it somehow.
Okay, so we're gonna have to go down that rabbit hole at a later date because so the wrong company has been getting some real.
Well, look at it like this. Look at it like this, right? People are going after Bitcoin. Everybody's talking about Bitcoin, right? Oh, Bitcoin. Nobody's talking about AMD, Advanced Micro Devices, or NVIDIA that sells the GPUs. You follow what I'm saying? Sells the GPU.
What is a GPU?
Oh, okay. Let me go back. So NVIDIA makes video cards. The easiest way to explain it. Video cards for your computer, processing components for your computer. They're in your vehicles now, so the infotainment system in your vehicle most likely is from NVIDIA. AMD also makes chips that go into your computer, and when you're mining for these cryptocurrencies, you need a lot of computing power. So yeah, everybody went to crypto, but it's like Nvidia and AMD are selling the pickaxes. You understand? They're selling the equipment that's necessary to get the Bitcoin. So by default, they're gonna make money. Does that make sense?
Yes. By
So
default.
that's what. Yeah, by default, they're gonna make money. It's like if there's more vehicles on the road that use, fossil fuels like gasoline, then more gas is going to be sold.
Mm-hmm.
Right? If there's more people in a stadium, then more beers and water are going to be sold. If there's more people mining for Bitcoin, then more computers are going to be sold. So companies like HP, companies like Intel, companies like Nvidia, companies like AMD, they benefit off of this Bitcoin wave, right? The underlying theme that I explain to clients, any business that is relying on the customer to come to them is a dying business. The customer's not coming to you. You've got to bring it to the customer. So any business that's bringing the product to the customer is doing well. So let's talk about businesses like that, right? They're bringing it to the customer. Etsy brings it to the customer. They bring a unique product to the customer, a product that's not mass produced for the most part. Amazon brings it to the customer. Walmart with Walmart Plus, bringing it to the customer. Disney Plus, bringing it to the customer. Netflix, bringing it to the customer, right? Alibaba brings it to the customer across the entire world, bringing it to the customer.
Listen, when I was in college, I used to sell purses from Alibaba and in BlueBerry phones.
Right.
And
they weren't even Blackberries?
Before, they were, trying to be like BlackBerry, but it was a Blueberry instead. I am really mad at myself that I didn't know then what I know now about stock, because I was using Alibaba before United States was even up on it. So
right.
Had I known. So what are some of I don't know you can even answer this question. And as far as like what companies are the Alibaba, like how do we identify, maybe that's the better way to frame the question. How do we identify companies that are in their beginning stages that will one day grow up to be
the newsletter?
I knew your ass was going to say that.
But no, I mean, listen, if it's not my newsletter, it's going to be someone's newsletter. Like they're doing the research. So like Wall Street Journal, or even some of these conferences, right? The Consumer Electronics Conference that's supposed to take place in January, it's going to be virtual now. So the Consumer Electronics Conference is an annual conference, takes place usually in Las Vegas. And that's where you get to see all the upcoming tech or all the upcoming smart devices or whatever have you, that's going to be released to the public. But the guys with these newsletters like myself, Wall Street Journal, Barron's, they're going out and doing the work and doing the research. And then they're bringing it to the customer. You follow what I'm saying, Taylor? Bring it to the customer.
So hold on, let me go back so we can go ahead and put this newsletter up un más. There you go. Y'all see that on the bottom of the screen for those that are listening?
I'm gonna again, I can't stress this enough. Like I started that situation in 2020. And the reason why I started it is because I kept getting DMs about the market, the DMs in general. Hey, can you help me? Can you do this? Can you do that? And I would spend time with people helping them, but they wouldn't take action on the information. So I said, okay, I have to put a price on it, but it can't be sticker shock that makes them not participate. But it has to be enough that they have some skin in the game, right? So I'm not holding anybody hostage. If they don't find value in it, don't stay. But I'm gonna give the value, and anybody that kind of says, okay, we want to take advantage of that, they can do so. But what happened recently, as far as brokerages are concerned, and one of the reasons why I did it, the big brokerage firm said, if you don't got 250 grand, we don't want to talk to you. That was the minimum account size. So Morgan Stanley, Goldman Sachs, Merrill Lynch, right? All these big names that everybody's familiar with, they said, listen, in order for us to manage your money, it's $250,000 minimum. So they pushed everybody out who had less than 250,000. And that's when the proliferation of the robo-advisors started to pop up, like Betterment. That's a robo-advisor where you're not getting a personal touch. You're not getting a human touch. It's an algorithm that's taking information that you input and it's doing its best to kind of give you a situation or plan for you to follow.
Mm-hmm.
So if you want to do it self-directed, I would say, oh, hold on. Also, Tayla, if something comes out and you find yourself using it, more than likely over time, you will it more. Probably others will too. She has a point, or I believe that's a woman. I'm assuming that good. What's that?
He has a point, and that's true because I was using Alibaba, and then other people joined, and then I'm the reason why the stocks rose. You're welcome. No, just joking, but
it's the psychology.
Yeah,
it's the psychology behind it. When things were going down in the Capitol, when they were storming the Capitol, I had this stock that I've had for a while, and it did nothing. Right? It did nothing. I've had it, and it did nothing. But the day of the Capitol raid, it was up 80%. And I was like, what the hell's going on? Now, they weren't really doing anything, but once I analyzed the business, I said, oh, now I remember why I bought this thing. They made body cameras. They make body cameras and bulletproof vests. I said, oh, after this situation, they're probably going to want to review all the body cameras, or they're probably going to want to say that company's going to get more business. You follow what I'm saying?
I got you. Well, you have given us 30 minutes more of your time than was initially asked for. So I can't tell you how much I appreciate your time and would like to hold you hostage again next month for another hour. And again, the month after that for another hour. And so we can build until we all have portfolios that look like yours.
Let me say this, right? One of the reasons why I love coming on programs like this and just talking in general at large, I never really have a structured, and people say that they're like, oh, you need to come up with this structure or whatever have you. I just want to get into a regular dialogue about money. I want people to come face to face with their money, right? Money is this taboo thing that nobody likes to talk about, right? Until you need it. And then when you start talking about it, you need it, it's an uncomfortable situation.
Yeah.
Right? So I love having these conversations. If you started this all over, everything I said would be completely different because I would be in a different mood or whatever, but the information would kind of revolve around the same pretext, right? Or context, but we just need people to understand that they're in their own way. Move out of the way, put your money, because the bank's investing your money. Please believe the bank is investing your money. You know how they're investing it? Car loans, credit cards, equipment lines of credit, mortgages, bridge financing, right? Multifamily mortgages. They're investing your money.
And then I just walk away with my 1%, my 1 cent interest after they done used it for everything that they wanted to make money for. Here go this penny, Taylor.
Have you ever heard of a company called EXPI World Holdings?
No. Tell me more.
Let me see. EXP World Holdings. That's the parent company, but it's called EXP Realty. You ever heard of EXP Realty?
Mm-mm.
Okay, because you're in the real estate business, right?
EXPI World Holding. But yes, in real estate, yes.
Okay, so their portfolio is EXP Realty LLC, Showcase IDX, and Verbella LLC. It's a real estate brokerage, cloud-based international real estate brokerage company.
Okay.
This was in the newsletter. This was in the newsletter. It was added on September 14th at $42 a share. The symbol is EXPI.
I just found it. It's $75.82.
Oh. What if you had put $500 in it? It'd be worth $900 right now, or $5,000, right? But that's a business that you're in.
Damn. Yo, so how much are you an hour?
It's not necessarily by the hour. If you're talking about on a consultation basis, I do an initial consultation. I charge $149 for that, right? But on the newsletters, right? Because if I charge $150, they'll scoff. They'll freak out.
Lord have
mercy. But you know what it is? You know what the funny thing is, Taylor? If my wife was here, she would be like, "Yo, you talk too much," and I'm like, "That's how we pay the bills."
Well, I appreciate your time. We got to go pay these bills. I thank you. I love you. I appreciate you. I'm going to send you the link for next month for us to have this conversation again. If you guys like replay it, rewatch, share with your friends, like it, subscribe, all that good stuff. It's an exchange of energy. Like we just gave you the game. So it'll be lovely if you could just go ahead and like and share with your friends. And that's our exchange of energy. Right? I give you, you give me. And so Palmieri, I thank you so much for all of this knowledge. I'm going to go open the newsletter. How about that?
Listen, you missed the Zoom yesterday. I did a Zoom I did a Zoom. If you check your email, you'll see I sent out a link for the Zoom. And I had a Q&A and we talked about all things on the letter. You're not going to get that. You're not going to get that with Wall Street Journal, Barron's, or whatever have you. They don't have to do that. They're an established, long-known company, right? I just started this last year. So as far as the newsletter is concerned, I started that last year, right? So
okay. And it did. I really did not open. I'm going to do better.
You better do better. It's on you. You better do better. Listen, I appreciate you for patronizing me. I do. But if no one patronizes me, it's not going to stop me from doing what I do in terms of investing, right? I did that as a platform because you got to take yourself serious, right? You got to participate in your own rescue. So if I make you put skin in the game, then you'll take it seriously. At least that's what I hoped. I hope people would take it seriously. I'm like, hey, I'm taking money from them every month. Maybe they'll listen now. Because if I'm giving it to you for free, you're going to be like, that's a great idea. And you're not going to do anything because I've come across it way too many times. Oh, that was an awesome idea. Like my cousin Rudy that you met.
Oh, yeah.
We was out in Texas, right? We were out in Texas and he was bringing me back to the airport, right? And I said, listen, I got this company. I need you to buy it, right? So he was like, I don't know how, blah, blah, blah. I said, all right, I'm your cousin. I love you. Give me your phone. He had an E-Trade. I said, give me your phone and how much money you have there. So he showed me how much money he had there. I said, buy this and we'll talk later. That was at $6 a share. It's at 26 right now. It's been as high as 33.
And who was it?
Magnite. But when you see, so it was added to the list. I think it was 2019, if I'm not mistaken, or it might have been 2019. My first purchase price was $6, and then they merged with a company called Rubicon, right? When they merged with Rubicon, they then changed their name to Magnite. So real quick, just to explain what they do, they're a buy and sell side advertising platform where people go to place and sell ads. And some of their number one customers are Roku, Fire Stick, the Fire Stick TV, right? Chromecast.
That's like, hold on, say their name again, because these are platforms that haven't reached pinnacle mass yet. And so.
Listen, one more story. One more.
Hold on, tell me the name.
Magnite.
What'd you call them?
Magnite. So 2018, I'm in the business of trading. So 2018, this company, the Trade Desk, comes onto the scene at $40 a share. I bought it. I bought the Trade Desk. I bought a bunch of it for clients. And then it ran up to 160. And that's fourfold on your money. So I'm like, all right, this is fantastic. We're out. My clients think I'm a hero. It's great, right? I sell the stock at 160. My clients are like, Paul, whatever happened to that stock that we were in? I never looked back. Do you know it went to $900, Taylor? That hurt. That hurt. So I'm saying that to say this, right? That's why I set up so many different accounts, because I have stocks that I'll never sell. You understand? Like, that's it. You have to pry them out of my dead fingers. Like, it's over. You're not getting them from me, because I realize that when a company is doing well, if you buy a stock at 20 and it goes to 80, they've got $60 more in cash to execute and grow their business. It's still growing. You understand what I'm saying? It's still growing. So when we sell, we're basically removing ourselves from any potential growth whatsoever, right? But that went to 900, and this company Magnite is in the same space.
Okay.
They're in the same space.
So if you missed any of if you didn't catch it, it's on replay. You can go to YouTube and rewatch. You can go to TAYLAANDRE.com and click on the YouTube, and then you will find this conversation. And this is game. This is damn near free money.
It is. But the thing is that, the stock market is a beautiful vehicle that's been around long before we were alive, and it's going to be around long after we're gone. I don't know about this crypto thing. Maybe this crypto thing is here to stay. But I know the stock market has made many, many millionaires, and it continues to do so, right? So, I don't deal with Forex. I'm not saying anything bad about Forex. I just try to avoid things that trade 24 hours a day, because I've got 4 children and a wife that I like to spend time with. So at 4 o'clock, when I'm done, I'm done. You know what I'm saying? But, this crypto trades on a Sunday night at freaking 6 o'clock. I don't want no smoke with that. I don't want nothing to do with that.
Well, I thank you. I love you. I appreciate you. We're going to go pay these bills, and I am going to send you the link so we can have you back next month. We are going to continue to build so our portfolios can build as well. And so I hope you have an amazing day. And I am Tayla Andre. Waking Up with Tayla Andre has absolutely nothing to do with the time of day we link up, but about waking up your third eye with unorthodox conversations leading to universal consciousness. We're going to go and pay these bills. And when we come back, we're going to talk a little bit more about love, life, and the pursuit of money.
You are now listening to Spark FM.
Paid family and medical leave is here. And if you're an employee in Massachusetts, you probably have questions. How does PFML work? When can I start using my benefits? How do I apply? Is PFML really for me? There is one place to find your answer. mass.gov/PFML. It's time to get to know paid family and medical leave. A message from the Massachusetts Department of Family and Medical Leave.
Are you tired of renting and need more of your own space? Are you getting stressful letters or calls from the bank? Does your home require expensive repairs and you just don't have the funds to fix them? Regardless of whether you want to buy or sell, Taylor Andre of Thumbprint Realty is here to help. From saving your home from foreclosure to walking you through the process of becoming a first-time homeowner, Taylor makes real estate easy. With your best interests at heart, knowledge of the market, and a passion for people, Taylor is dedicated and motivated to serve you.
Good rising, good afternoon, good evening, or good night. I am Taylor Andre, and I am determined and dedicated in assisting you in all of your real estate needs. Give me a call at 617-459-0041. Again, that number is 617-459-0041. Or you can email me at TAYLA Andre at thumbprintrealty.com.
Things may seem a little bit different now, but your health remains a priority. With the Massachusetts Health Connector, you can stay happy and healthy. Whether you're employed or have recently lost your job, you have options to stay insured. Visit mahealthconnector.org to compare health insurance plans and choose the one that's right for you and your family. Open enrollment ends on January 23rd. Visit mahealthconnector.org or call 1-877-MA-ENROLL. That's 1-877-MA-ENROLL.
Good rising, good afternoon, good evening, or good night. I am Tayla Andre. Waking up with Tayla Andre has nothing to do with the time of day you watch this video, listen to this podcast, but about waking up your third eye with unorthodox conversations leading to universal consciousness. And one of the things that we need to talk about getting your money right, but we also need to discuss what's going on with your pockets and your health and making sure that everything aligns perfectly and you're doing the adulting, all right? Adulting is really hard. Adulting is really hard, especially when health insurance is $900 a month and your ass make about $4,000. So 1/3 of your entire income goes straight into healthcare. We got Tina back because Tina is back to talk about healthcare with us because the open enrollment is about to close off. The commercial that we've been playing and will continue to play because open enrollment is important. If you do not have healthcare, or if you do have healthcare through your employer, but you want to see whether or not you can fill in the gaps a little bit or maybe get a cheaper rate, this is the day that the Lord has made. Let's talk about it, Tina. So as far as the last time we spoke, I told you that my company was looking for healthcare, and I have not been able to connect with somebody because open enrollment is closing. What do we have, like 11 more days until open enrollment is closed? And so we have 11 more days to apply. I remember the last conversation we had, you said do not wait until the last day because you're going to be asked out. And so please tell us, like, how do we get on this now? And you know, the whole time is pretty long right now. And so give us the tips, tricks on how we can kind of like work around it.
Okay. Well, thanks for having me back. And one way of working around it is being able to work with a navigator. And so there are, I think, 17 or 18 navigator organizations across the state, and they can help you if you're calling the Health Connector, if you're having problems with the website, they can help you. They can help walk you through it. And so trying the Health Connector, the commercial that you just played before, the mahealthconnector.org, or the phone number you can call, they have more staff on helping people, so the wait isn't as long as it has been in the past.
Okay.
But reaching out to a navigator is another option. And if you go to the Health Connector website, they'll give you a list of navigators in your area, and they should be able to help.
Mm-hmm. And I'm just pulling that up for those who are like, Taylor, what are you doing? I'm over. I keep going to the website, but it keeps coming up to a PDF. So let's just share the PDF, as a matter of fact. So the PDF, I want you to see it for those that are currently watching. If you are currently listening, you can go to mahealthconnected.org, and it's really the first thing that pops up when you Google it. And so, Tina, what are we looking at right now?
It looks like what you're looking at is information on some of the plans, the connector care plans. But if you look at where you are on your browser, and at the end of .org period, erase everything after that, and it should bring you right to the screen. I'm on their regular screen right now. So just type in mahealthconnector.org, erase everything after the /. It should bring you on up to a place that says it's open enrollment now.
Okay.
So try that, and then that gives you all of the information on where to go from there.
Mm-hmm.
So I think you just have a little too much information in your browser.
Yeah, and I went ahead and turned that off. Let me bust this open so you guys can look at the regular screen. And so this is the website itself, open enrollment now through January 23rd. And, you know, renewals, if you're starting here, if you need help, And so, Tina, I would love for us to talk offline because I need you now, like right now. So why is it so we talked about like why it's important to have health insurance, why it's important to, be knowledgeable about the insurance that you currently have and understanding the gaps that need to be filled, and how blessed we are here in the United States to have Romney Care, aka Obamacare, aka the best health insurance plan in all of the United States of America. And so we are more than blessed to have the health insurance that we currently have. But what exactly is the health connector? Can I completely walk away from my employer's health insurance? Like, no, I can't.
No, you can't unless the insurance is considered unaffordable, because there are
affordable to me. It's $100 a month more, so it's unaffordable, right? I can say that, right?
Well, but what happens is that depending on someone's income, then what happens is that if their income is low, even if it's considered affordable, there are supports that the state, that the connector through Mass Health is able to provide to subsidize some of those premiums. So starting with what your company offers first is the place to start. See what you can get, because that's not going to be based on any kind of income. But if it's unaffordable, we can walk you through that with the Health Connector. We'll walk you through it to get an affordable plan.
And what if everybody says like, yeah, all my health insurance is unaffordable. My health insurance is unaffordable. If the Health Connector has the best rates, isn't everybody's health insurance unaffordable based on the best rates being at the Health Connector?
Well, it isn't just the best rate. It's what someone is qualified. There are certain things that are in the Affordable Care Act law that, that if they consider your employer's insurance affordable, then that's where you need to start, and then look for other assistance. I think the idea would be is that it's putting some of the responsibility on the employers who, especially the large employers, that for them to cover it, because they're making money, and so they should be part of the responsibility of providing health care for individuals. Now, there's a lot of debate about should it be that way, and we know now with the fact that so many people lost their jobs, and when they lost their jobs due to COVID, they lost their health insurance and they were without anything. And so there's lots of discussions, and I don't want us to get political here, but there's lots of discussion about universal health care and single payer, that it doesn't follow your job. But for right now, the system that we're in is, the majority of people do have insurance. Full-time employees have it through their employer, and then there are other supports to help them to make that more affordable. I know it. I hear the doubt in your voice, and that's what the Health Connector does. That's what we navigators do. Is we really help people look at all of the different aspects of it to get something that meets their health needs, but also fits in their pocketbook too.
And so again, it's mahealthconnector.org. We have been playing the commercials on replay for the last 2 months that open enrollment has been taking place. And unfortunately, I'm sad that open enrollment is about to end, but you guys still have 11 more days to get proactive. So you have 11 more days to get your ish together and sit down and figure out, get a quote. You can go to the website and get a quote. You can speak to one of the advisors. They're called
navigators.
You can speak to one of the navigators. If you go to the website, it'll tell you if you're a new applicant, it looks like it's really easy, as far as getting starting and applying. How is the Health Connector different from, let's say, for instance, you're currently on Mass Health and you just got a new job, or you're a 1099 and you're converting over? What does that look like for someone who is new to healthcare as a whole?
Yeah. And we see a lot of those people. Sometimes they've moved from a different state. As you say, sometimes they have ended a job or they got a job, all of those things, or they've moved to be self-employed. When you say 1099, what you're talking about is how people get paid. They don't get paid with a regular weekly paycheck, and they're not considered an employee, so they usually don't have benefits, but they're considered a self-employed person. And I always give examples of Uber and Lyft and Amazon delivery, all of those kinds of things. People get paid as contractors. So you would start, if you were any of those people, you would start by going to the Health Connector website, even if it's just to get the phone number to call, or the page that Tayla showed has a little box that says get help. And if you click on that, it gives you the option of choosing the area of the state that you live in to find an assister that is close to you. So that you're able to do that there. And then they're going to walk you through the application. And they're going to help you answer all of the questions about your current income, what you project your income is going to be for this year. You know, some people are on unemployment and they know that they have unemployment through March, and that's it. So their income, as far as they know at this point in time, may just be $6,000, you know, because, you know, they don't know. Who knows what's going to happen the next week? And so you're applying based on your current information and your best projection moving forward.
Year.
Yeah. Well, next year is this year, so we're talking about 2021. And then it's you know, and right now the open enrollment ends on the 23rd of this month. But if someone lost their job, and let's say they lost their job on the 25th of the month, and they don't have any income, or they have really low income, or they lost their job and they're collecting unemployment, there are life events that allow people to apply outside of open enrollment. So it doesn't mean people have to wait until November of this year. Anything that they have where something has shifted in their life, they want to reach out to the connector or to a navigator. If their income went down, we want to help them change that so that their premium goes down. If they lose their job, we want to remove that job and have them reassess what they're qualified for. So any kind of change in someone's life, they want to contact someone and see, because it may make whatever they have now even more affordable and may allow them to have even a stronger plan. My thing is keep reaching out. It's overwhelming, I know, especially now, and people's lives are just, you know, or so messy. You know, there's so much going on, and you have a week like last week that having nothing to do with our jobs. We're just so totally overwhelmed about the world we're living in. But this is important, and take the time to do it, and someone will help you through the process. That's what we keep saying over and over. It helps to link arms with someone, and they'll help walk you through the process, and that makes a big difference.
Thank you so much, Tina. We're going to have you back again to remind people to do what they need to do as far as getting their health insurance aligned and answering any questions that people may have. And so we have come to all the way to the top of the hour. Tina, thank you so much for your time and the information that you have. Listen to like the commercial that we play has all of the information, like no excuses. And I've also put it online for those that are listening. It's 1-877-623-6765. So that's 1-877-MA-ENROLL. If you don't remember the numbers, MA-ENROLL, but it's 1-877-623-6765. Tina, thank you so much for your time. I am Tayla Andre. Waking Up with Tayla Andre has absolutely nothing to do with the time of day we link up at about waking up your third eye with unorthodox conversations leading to universal consciousness. I thank you. I love you. I appreciate you. I hope you guys have an amazing day. Mwah.